Welcome to the Money and Wealth Show, brought to you this week by AmericanManganeseInc.com. Here's your host, Sterling Fox.
Welcome to the Money and Wealth Show, the program that offers you opinion every week on business, the economy, and the markets. And today it's a real pleasure to welcome from West Palm Beach, Florida, and Uncommon Wisdom Daily, natural resources analyst Sean Brodrick. Welcome. Good to see you.
Thanks for having me on.
Tell us a little bit about yourself and the sort of work you do.
Well, basically I'm in the small cap natural resource area, and I've been covering small cap Canadian stocks for a long time.
Mm-hmm.
And the beauty of it is that with the miners in Canada being some of the best in the world, they export their expertise everywhere. So this takes me to places like Chile and Brazil and Argentina and Mexico and stuff like that. Just tracking down these small undiscovered values, these ones where they know they have something, they haven't convinced the rest of the market, so their share price hasn't caught up yet. And so there's some real potential for shareholders to really do very well.
I'll bet you in your repertoire of stories, you've got a couple of real home run stories where you've been tromping around some jungle or some outback somewhere, investigating, doing your boots on the ground bit, and actually came across something that really went crazy.
Yes, and but the weird thing is sometimes you find things and yet the stock doesn't go anywhere. For example, one time I was up with a diamond company up in Nunavut. You know where that is.
Course,
and and the like small town near us had the highest birth rate in Canada because there was really nothing else to do there. And but
long winters.
Yes, long winters. Wonderful people, and I have to say they were extremely friendly to me. And we were there during the 24-hour sunlight,
Sure,
of course.
yeah. Mm-hmm.
So the only thing that you have to do is to go out and look for stuff. And this was a diamond exploration camp, and we were flying around in a chopper and like tromping around, and we found this big cliff of like kimberlite. They hadn't seen it before, and so we got to investigate that, and that's an indicator that there could be diamonds in the area. And then they found more indicator minerals on it. So it was really exciting. Everyone in the camp was jumping up and down.
Sure.
It was so much fun. That stock hasn't gone anywhere. That's the weird thing about this, is that some people, they find things, and even though it's really good, they just don't actually seem to gain the traction in the market. In fact,
Is that a communications issue as much as anything else, just not being able to effectively get the word out, Sean?
That, I think sometimes it's timing, because I believe that stock, like many others, was hit by the financial crisis that we had.
Sure.
But many of these small stocks, I find, are going back to resources that were originally investigated by larger companies, right? And who did lots of drilling and proved it up, but then the bottom fell out of the gold market. And so they took all their data and they put it on a shelf and they went away. And now these guys who maybe had a junior geologist career at that company, and they heard about this old resource somewhere that the company had like forgotten about, wasn't doing anything with, now they're out on their own. Now they're actually putting their own teams together and they're chasing after these old resources. And what was at one time, marginal, maybe we'll do it, maybe we won't. Well, ore grades around the world have gone down because we've used up the really rich grades.
And the easy to get stuff.
Right,
as well.
right. So now this stuff that was once marginal looks extremely good.
Right.
And so these guys can pull those things out of there and just do some really great work. And now with the phase we're in the market, I think that they're really coming into their own, a lot of them.
And one thing that we've learned on this program, Sean, is the cost. You go after a particular mineral, and so it becomes a question of what's this worth right now on the world market, and what's it going to cost to get an ounce of it out of the ground ready to sell to the world market. And it's the difference between my cost to get that ounce of whatever and what the world is willing to pay for it that makes my board of directors decide whether we're going to go get it or not.
Yeah, well, there's so much that goes into it. For example, when I was at the World Resource Investment Conference, I often go from one booth to the next speaking to the companies that I find interesting, and there's so many questions you have to ask them. And it's not just having a good deposit that makes the decision whether you want to invest in a company or not. Management is extremely important. If you know guys who have had success before, they know how to take one of these small small like incubator companies and really grow it into something big.
Right.
They know how to do that. Well, you know what? Chances are that makes it much more likely they can do it again.
So track record is important.
Very important.
Okay.
Also, what kind of plan do they have? If there's some guys, and they have a large land package and they're maybe drilling out there because they think something's out there, that doesn't really interest me. I tend to favor the companies that know the resource they have. They're doing the drilling now to really define it, to prove it up, and then bring it to the next stage. And then, what kind of like roads and power and like stuff like that, because you can have a nice resource, but if it's going to be very expensive to mine it, because you have to run everything on like generators and the roads are out 3 months of the year because
Sure.
of flooding, or you don't have any water maybe. That could be another problem. There's many building blocks that go into a great small company, and you have to make sure that all the little boxes are checked before you want to put your money to work.
Now, just before we go to the break here, you mentioned I introduced you as an editor and analyst with Uncommon Wisdom Daily.
Yeah.
But you also have a couple of newsletters that you write up and report these companies that you travel to see. Where do we find those?
Well, you can find those on the Uncommon Wisdom Daily website. One's called Crisis Profit Hunter, and basically that goes along with my book, which we haven't even discussed yet.
Oh, we'll get to it.
Which is The Ultimate Suburban Survivalist. And because in Florida, we had a year with 3 hurricanes, and every single time after the hurricanes, I would see people lined up outside the supermarket to buy stuff. They didn't learn from one hurricane to the next what they needed to do. And I had friends in like New Orleans who got swamped by Katrina.
Sure.
So I put together everything you needed to know in order to survive the worst. And so I see 5 big emergencies that we could be facing in like the next decade. And so that particular publication, Crisis Profit Hunter, is how to invest to protect yourself and potentially profit from those emergencies. And actually, that's done pretty well, but that happens to be a good area of the market to be in anyway, which is natural resources.
Well, it certainly leaves the door open for much more discussion. Our guest this week is Sean Brodrick from Uncommon Wisdom Daily. And where is it, Sean? In Florida again now? It's West Palm Beach. That's
West Palm
right.
Beach, Florida.
Back with lots more right after this.
Always consult your investment professional before making any investment decision.
American Manganese Inc. has a manganese deposit in Arizona. Indicated 6.7 billion pounds. Inferred 8.9 billion pounds. Potentially the lowest cost producer of electrolytic manganese. American Manganese Inc. has a projected cash cost of 44 cents a pound. The metal trades near $2 a pound. Do the math. Trading symbol AMY. Visit AmericanManganeseInc.com or phone me, Larry Ray, at 604-531-9639.
You're watching The Money and Wealth Show, archived online at TalkDigitalNetwork.com. Here's your host, Sterling Fox.
Welcome back to the Money and Wealth Show. Our special guest this week from West Palm Beach, Florida, and Uncommon Wisdom Daily, natural resources analyst Sean Brodrick is with us. Now, you were talking about the survival book that you wrote based on your personal experiences and observations watching your fellow Americans go through natural disasters.
Right.
And being unbelievably unprepared, despite the fact that they had several previous to learn from. That was what prompted you to put this book together.
Right, and it's not just the things I know. I went and I interviewed a lot of experts, which is, basically how I approach anything, is I may not be the smartest guy in the room, but I can interview the smart people. And I just got a lot of information that turned it into quite a nice handy book. You can look it up on Amazon.com, and it's called The Ultimate Suburban Survivalist. And it's just a book for what if the worst happens in your neck of the woods? What are you going to do? Do you have an escape plan? And what should you be doing right now in your daily life to prepare for the worst things that could come your way?
Well, now let's take that premise and apply it in a specifically financial context.
Sure.
Question 1, first of all, though, there's a lot of pessimism out there, some of which has made its way onto the airwaves of this program with some very interesting guests, but some of the predictions are pretty dire, Sean. So how does one set oneself up to survive these worst case scenarios that are being trotted out on pretty much a daily basis these days now. It's not looking very optimistic. So how do individuals position themselves to get through this next big financial crunch?
Right. Well, the problem is we don't know exactly what the crunch will be. That's the thing about a black swan event.
True.
You never know what the black swan is. However, just the ordinary smart things you can do is to cut down as much debt as possible, and I do cover that in the book. You can also position yourself with investments that are somewhat more resilient and not maybe dependent so much on the market. And I'm a big believer in owning physical silver and gold. Now, it's true you can't eat gold, but you can exchange it for things that that you can eat later on. Also, we have things like, we have a great pantry at our house. In fact, we actually converted one closet into a survival pantry.
Okay.
And the nice thing about that is if you shop smartly, and my wife is one of the best shoppers I'll ever meet, you can really cut down your food budget. And just by buying things in bulk and just using coupons and like all this stuff, she really cut our food budget in half. That's money we can use for other things.
So you save money and you're incredibly well stocked at all times.
Right, exactly. Okay. You just don't have to run out to the store to pick up something because you got it.
All right. Now, in terms of, suppose now, as some are predicting, the U.S. dollar takes a tumble, and we have some serious erosion in value. The collapse of the dollar is what many are predicting. What does one do in order to survive that? I mean, especially if most of your assets are in dollars, which suddenly are worth less.
Well, here's the thing, and this is an argument that I often have with people, is I don't see a collapse where the U.S. dollar becomes worthless. I don't think we have a Zimbabwe situation.
Right, okay.
But it could lose half its value in a relatively short period of time. And something like that would be a shock for many Americans. And in a way, all Americans are speculators in the U.S. dollar because that's what most of their wealth is in.
Sure.
Now, our friends up in Canada may feel a little superior about that, especially the way that your currency has performed. But
we're pretty connected to the U.S. market.
That's
our best customer is broke and can't buy our stuff, we're in the same basket as that best
Exactly.
customer.
We are your biggest trading partner.
That's right.
And so that's a real problem. And that's something that I write about a lot. The U.S. dollar is under severe stress. The only reason that it actually has held up so well is the problems in Europe, make the dollar look good because it's like the U.S. dollar is winning the beauty contest in the leper colony. Everybody's fingers are falling off, but it has more fingers than like the other people, so it actually looks okay.
That's a really interesting analogy. I haven't heard that one before. It's very good.
Well, but so I do think that people should start to prepare for that. One way is to own physical silver, physical gold. I think physical palladium is something that's overlooked quite a bit. And in fact, that's one of the things that I touched on in my recent talk at the World Resource Investment Conference. The three metals that I think people need to own, which is gold, silver, and palladium. Palladium is actually a rare metal. I mean, they actually produce less than 7 million ounces of it every year. It is used a lot in the auto industry, but we are seeing a trend that's just beginning toward investing in it, using it as an investment vehicle. And so palladium, which it is somewhat a precious metal, I think it could become a lot more precious.
Well, just you piqued my interest here. Let's assume for really round numbers, and these do not necessarily apply to this moment, but let's say if silver is $50 an ounce and gold is $1,500 an ounce, what would palladium be on that average scale?
Well, that's an interesting question, and let's say, like, you could talk about what palladium is, but where is palladium going to go? That's the thing that I like to look at, and I think in the next 2 to 3 years we're going to see $1,000 palladium.
Okay, so it's between gold and silver right now.
Yeah.
Okay. All right.
But I think we're easily going to see a double or more in palladium as it becomes more of an investment vehicle. We're already seeing a fund that lets people invest in palladium. The symbol is PALL, but that's just one fund in the U.S. When other countries start to do the same thing, and we've seen this happen before with gold and with silver, then we'll see those investment vehicles wanting to own physical palladium. It isn't produced that much. So the potential is that it could really have an explosive move. Now, most palladium is used in the auto industry, and we keep hearing that they're going to have a substitution for it here, there, with like one thing or the other. And, I certainly wish them luck on it. It won't be anytime soon. And you won't actually see a quick adoption by the auto industry of like anything else, because they tend to be very conservative and they don't tend to like to change what they do in a fast way, which has been a problem for Detroit before when they refuse to adapt quickly. But so maybe we'll see a substitution later on, but I think that'll be long after palladium becomes a more precious metal anyway.
Well, class, clearly our homework assignment this week, as handed to us by Mr. Brodrick, is to find out a whole lot more about palladium. Back with more on the Money and Wealth Show after this.
The Money and Wealth Show is archived online at talkdigitalnetwork.com.
Molycorp Gold Corp has substantial assets. Magnesium deposit, inferred 52 billion pounds. Molybdenum deposit, indicated 1.9 million tons. Inferred 1.8 million tons at 0.087% MO. Past silver producer, average 182 ounces per ton. Trading symbol, MOR. Website, molycorp.com. Or phone me, Larry Ray, at 604-531-9639.
You're watching The Money and Wealth Show, archived online at talkdigitalnetwork.com. Here's your host, Sterling Fox.
Welcome back to the Money and Wealth Show. Our special guest this week is Sean Brodrick, joining us from West Palm Beach, Florida, where he is an editor of UncommonWisdomDaily.com and a couple of other newsletters as well. And as you and your fellow analysts at Uncommon Wisdom look at 2011, we're about halfway through, Sean. How do you think the rest of this year is going to play out?
Well, that's a really interesting question, because I don't think that many investors, my friends who I trust, really have a clear idea either. And there is some fear in the market, but that fear isn't widespread. If you look at the VIX index, which is basically a fear gauge, it's low, which means that most people are complacent about where things are. That's the kind of a situation where you can have a really steep correction. However, I would be a buyer of that correction, because I think that...
A correction meaning a drop in prices, a reduction in prices.
Right.
Okay.
Here's why. Because I believe that, yes, we are facing some real headwinds. One of which is that many people are afraid that since the second round of quantitative easing is over, there isn't going to be that loose and easy money going into the system, because the U.S. federal government was like giving the money to the banks. The banks had nothing else to do with it except play the stock market.
Right, yeah.
And so...
Far be it they should lend it to people.
Right, exactly.
Right.
So, since that money isn't there, people are thinking prices will go down, and I think that is a real potentiality. However, I think even though Ben Bernanke has said that there won't be a third round of quantitative easing, I think they'll call it something else, and they'll just roll it out. And why will they do that? Because of the bad economic news we've seen. And they don't want to go into an election year and have things just continue to be bad and like stuff like that. I'm not saying that he's a really political person. It's just the job of the Fed is to try and keep the economy looking as good as it can. And if the economy looks bad, he has to look in the mirror every day and say, you're the guy who's not helping the economy. So I don't think it'll be called quantitative easing 3.
I agree.
But it'll be called something else, and I think that we'll see that push toward the end of the year. Before that, though, I do expect a dip. I expect things to go down. And so that's when, the doom and gloom will come and all that stuff. But I think that's when you have to pick and choose your targets, get your short and sweet shopping list put together, and then get ready to go to work.
If quantitative easing is a failed brand, and they're going to come back with some other kind of similar thing, but call it something else. If it's a failed brand, and everybody knows it's failed economic policy, Sean, why on earth are they bringing it back, albeit under a different name? It's still a failed policy.
It's very strange to me, because obviously throwing the money at the bankers didn't work, right?
Right.
But they continue to do it. However, the bankers seem to have control of the government, so maybe they'll continue to do that. Tax cuts for the wealthiest Americans didn't seem to work either, and yet there's no talk of taking those off the table. The one thing we haven't tried is actually a jobs program, like they did back during the Depression, and there are some comparisons out there that say the broad measure of joblessness we have is on some level up toward that kind of levels they had during the Depression. When you look at all the people who are underemployed and or else, have other things going on, have just stopped looking for work completely, I think a jobs program to rebuild our bridges and stuff that are falling down, that would be the thing we would do. However, you can't get through Congress right now because they have two, and I guess you can call Libya maybe a third war that they want to do. So I think we should take the money that we're spending on wars now and instead build our own bridges. But I don't think that's going to happen. So if we're not going to do what we should be doing, and that would be my plan for what we should be doing, then they'll keep doing the stuff that they do just because they don't know what else to do.
Right.
And
they have to be seen to be doing something.
Right. And it makes Wall Street
Instead
feel
of
better.
maybe just stepping back and letting the marketplace sort itself out.
Well, they aren't going to do that, right? They're paid to do something. I mean, you can't be the guy who's has his hand on the switch and you just hold it there. No, because other guys come up and say, you have your hand on the switch, you need to be doing something. So it makes Wall Street feel better for them to throw money at Wall Street. That's exactly what they're going to do.
Our guest this week is Sean Brodrick from Uncommon Wisdom Daily, and in a moment, the final word.
The Money and Wealth Show is archived online at talkdigitalnetwork.com.
Looking to advertise to targeted audiences? Online at talkdigitalnetwork.com or howstreet.com. On television, The Money and Wealth Show. And on radio, This Week in Money. To learn more about getting your message in front of our audiences, email us info@howstreet.com or call us 604-699-8600.
You're watching The Money and Wealth Show, archived online at talkdigitalnetwork.com. Here's your host, Sterling Fox.
And now, with the final word on today's show, here's our special guest, Sean Brodrick.
Okay, here's what I'm looking at right now is that people get too psyched out because they watch the market news and so they react to headlines. And I think people really need to take a longer term view of investing, decide what their goals are, decide how they're going to get there, and not get shaken out by the ups and downs of the news that's coming out in the market. And that's what we're seeing a lot of. People panicking because of what they see on TV. But the biggest obstacle people face, it isn't the Fed and it isn't China and it isn't any of that stuff. It's like the obstacle you have to the right of your left ear and to the left of your right ear. It's your own brain because you will psych yourself out. And so I think what you need to do is stop psyching yourself out, focus on the long term, and just try to do your investing that way.
Sean, excellent advice, and a real pleasure to have you come by and deliver it. We appreciate your visit very much.
Thanks very much. I had a great time. I'd love to come back.
And thanks also to Fritz and the crew here at Churchill's at the Holiday Inn in North Vancouver for the hospitality. I'm Sterling Fox, and for all of us here at the Money and Wealth Show, we'll see you next time.
The Money and Wealth Show has been brought to you by AmericanManganeseInc.com.